For those of you who have been to these events before, thank you very much for coming back. It's a great opportunity to get together with other investors, talk about what we're seeing in the marketplace, and in addition to that, to also being able to share what we're seeing in the market with all of you. So I think Dale's going to start. We have some cool data and information to share on what's going on in the marketplace, and we're also open to anything that you guys want to share. So we'll start with Dale. Go ahead.
Yeah, so I think I'd just like to have sort of an open discussion. Interrupt me whenever you want, ask questions. I just brought a few data points that I think are really interesting about what's going on in our real estate market and where we're at today compared to where we were a year ago. A year ago today, pretty much exactly, began the biggest precipitous drop in the real estate market in 1 week that we've had in this whole down spiral. So between June 17th and June 24th last year, we dropped $50,000 that was the average price drop by $50,000 in 1 week. And we've been tracking since we started to recover. The recovery really started late December, early January. We're definitely right around there. And we are back to where prices were on June 24th. So at the bottom of that cliff. So we're still not all the way back to the crazy prices of March.
No doubt.
But we are all the way back to where that big drop off the cliff happened when everybody's house lost 50 grand in a week. So what does that actually mean? Like what if you bought a house last year in March, you're still way underwater. That's true. But if you've been Alan a boss and you've been out working hard and you bought houses in 2023, you're up 14.97%. The median price is up 14.97% in 2023.
That's significant.
That's 5 months.
That is significant.
Right? So if that were to continue, that's the same crazy rates that we were at in 19 or 20 and 21, right? Like we'd be up over 25% in the year. Now, I don't think that will happen because I think we probably overshot on the downside. And so we're just kind of, some of this gain is recovery from going too far. And so if you're Alan and you were able to pick up some wholesale deals in January, those are going to look really nice. If you owned houses from last March, those look less nice.
For now.
But if you owned a median priced house in Windsor, then you're up $71,000 in 2023. And maybe you're down 170 maybe you were down at the low, but you regained $71,000 of that already.
So things are certainly back on the upswing for sure. They're not where they were, but they are starting to rejuvenate. They're starting to come back.
And so the question is why? Why in the world is the market so persistent when the Bank of Canada is doing whatever they can to stop it from being this persistent? They're trying to break, that's part of what they're trying to do to break inflation is to stop this returning creeping housing price. And so they've increased interest rates by an unprecedented amount. They're still not super high, but the amount of change in the last 12 months, we haven't seen since, like not even in the crazy inflation days of the late 70s and early 80s did they go up by this kind of factor, like where they would triple in 12 months, right? And I don't think the Bank of Canada likes their rates up this high because as they increase rates from here, the variable mortgage folks in Canada are now contributing to the inflation. Like it's becoming a catch-22 for their fight against inflation. But I think that the primary reason the housing market is just not recovering is because we just don't have enough houses. Period. End of story. There's just not enough houses.
No question.
So at events like this, I always, or have been talking for a year about CMHC's study that came out last June. Okay? I've got some updated numbers on how it's going. So CMHC predicted that we needed 5.8 million new housing dwellings between last June and 2030 in order to have enough housing per capita to hopefully bring prices back to what they were in 2004, which is the last time that you could buy a house with 40% of your income in Canada, across the board on average. Okay? 2004 was the last year that the average Canadian, now this is driven mostly by the big cities, but that's the last year that you could buy a house legitimately for 40% of your income. Okay? Right.
Stop.
Yeah.
Stop.
Yeah. You tell them that's the last time you could do that. Okay? But that's the goal. That's what CMHC would like to see happen is can we get back to that so that people could that would establish an affordability threshold. Okay? We are projected to build 2.3 million houses in that time frame, which leaves us 3.5 million houses short. How are we doing? Not so great. Let me just tell you a little bit about what's happened since last June. So we need 255,000 new housing units a year in order to just make the 3.5 million or the 2.3 million that we're intended to have, right?
That they're already projecting.
So even with that big gap, just to make the 2.3 that they're projecting, you need 255,000 a year. 2023, we're going to do 223,000. And we're projected to do 206,000 in 2024. Why? Because interest rates are triple what they were when people bought the land. So they are reluctant to put shovels in the ground and build on them because interest rates, they paid too much for their land if interest rates are going to be what they are today.
And as you can see, the gap is getting bigger and bigger and bigger. So not only do we have a 3.5 million unit housing shortage in our country, but now the originally intended amount of builds is not in fact even what was supposed to be. And so our gap is just widening, making the housing shortage that much more significant.
How much is the shortage in Windsor area? Do you have any statistics?
I don't have specific stats on Windsor. We have been building a lot in Windsor. But we also outkick our coverage in terms of immigration. Like we have more people that come here per capita than most places in Canada. We don't do as well as Toronto and Montreal, but after you get by those big cities, Windsor is an immigration minor hub, let's call it. And in 2022, after a couple of years of not much immigration because of COVID, Canada accepted the most immigrants that it ever has in the history of the country. And we have a plan to do more than that this year and more than that next year.
What does that say for housing?
Which compounds the problem.
That's
Compounds
correct.
the problem.
That's correct.
More people need more housing. That's the reality.
So the Royal Bank has a research note out this month indicating that they think that the rental housing crisis will be more acute than any other component of the housing industry. That we might have 3 times or 4 times as big a problem on the rental side in 2026 as we do today because there's just not enough supply coming in. And immigrants who arrive all overwhelmingly rent, obviously, when they first arrive here. And we just don't have enough rental spaces. We might be 130,000 units short right now in Canada for the people who need to rent, which is leaving our vacancy rate below 3% almost across the board in Canada. So if you're investing anywhere and currently today the vacancy rate's above 3, find another place to rent or find another place to buy because there's something wrong with the population growth in that community. Right? So even in small towns, the vacancy rate is dropping to below 3. 3 is the percentage at which things are sort of considered neutral, right? It's not great for the landlords, not great for the tenants, but there's some movement. You kind of need a little bit of movement in the system in order for people to be able to leave 1 bedrooms and move to 2 bedrooms when they form a family and things like that. As we drop below 3 and now closer to 2 in Windsor, nobody's moving.
It's very, very tough. You can see right here on our board, we've got our vacancy rate as of Friday was 2.6% at Marda. Marda managing 10% of Windsor's rental market is a pretty good representation. 2.6%. And I can tell you that in the last 60 days, Marda has had a vacancy rate of 1.9%. Yeah. And that's a problem. Yes, landlords say, oh, I love a low vacancy rate. But the reality is when your vacancy rate gets too low, nobody moves. There's nowhere to go.
When does rent control actually work? When there's no vacancies. Because rent control doesn't really work very well. Rent control is not that big a deal for landlords in Ontario for the most part because people move and you reset. You get some lifers that, so in an apartment complex with 12, you might have 2 people who are there for 10 or 12 or 15 years and they end up paying
And
half of what they should pay in rent.
And there's no question, no landlord wants to see someone paying the same rent that they can increase by 2% a year for what feels like forever. But let's talk for a minute about what the true reality is. What we really see is that our average occupancy is 24 months or less. So the reality is, if you have an average tenant, and that doesn't obviously apply in every case, but if you have an average tenant who stays for a couple of years or less, your turnover point is the best opportunity for you to reset rents here in Ontario. But if our vacancy rate, as I just said, in the last 60 days is 1.9%, right now 2.6%, it makes it really tough because there's nowhere for people to go. There's nowhere to move. People are making things work. They're trying to tweak and adjust. They're growing their family and staying in a smaller home. We have tenants in one-bedroom apartments who are just making do or making it work, or two-bedroom apartments who really want to move to a house, but there isn't anything out there. Not just that it may be unaffordable, which is absolutely a conversation to be had, but on top of that, there just isn't anywhere to go when you've got a vacancy rate that continues to get lower and crunch down and crunch down. And so when we see properties that may remain vacant or aren't getting uptaken as quickly, you can see right here on our stats board, we've got 23 units that are over 40 days old. That means we're not offering the right product or we're not charging the right price. That's the bottom line. Because to have something that's 40 days old in this marketplace means we have to make an adjustment. Now, sometimes those adjustments are outside of our control. Sometimes property owners, based on high interest rates, high purchase prices, they don't want to tweak their rent. They're not so quick or nimble to maybe make those adjustments, or they want to let it go a little bit longer. And by all means, because of the housing shortage, there is no question that if you just wait, you will find somebody at your price for sure. I don't know how long it's going to take, but you will find someone at your price. Absolutely.
So what's the best occupancy rate for the owner, not the tenant? You said it's like currently it's
About 3%.
I like 3.25.
So 3% is good for 2 years criteria.
It lets people churn over appropriately. Yes, you experience a bit of a vacancy gap. Yeah.
3%, I think, is,
So whenever it's 97% occupancy,
that's correct.
good for both. Actually, it's not legal.
It's not good for both. Exactly. And just as it shrinks, it just gets tighter and tighter. There's nowhere for anyone to go. And then the landlords can't reset their rent. Tenants can't move and reaccommodate themselves. It gets tough in those marketplaces. But we're seeing that in every city in Canada. This is not a Windsor exclusive problem. It's being exacerbated in Windsor by high immigration. Dale just explained, Canada took in more immigrants in 2022 than in the history of the country. So there's no question this problem is precipitating and continuing to exacerbate for sure. There's no question about that.
So I walked in late. But
That's okay.
What do you guys think? Part of the answer. I mean, we hear the government, the opposition saying the permits are a really big delay. A lot of administrative, and I know that this is true because of all my friends.
That is most definitely true. Yes.
Yeah, and it's expensive and it's delays and
Long time.
administrative stuff.
Yeah.
So that's part of it. And I think, I don't know for sure, I don't have the stats on this, but I know that Windsor has a higher amount of immigration to it than smaller cities.
Oh, yeah.
Percentage-wise.
Oh, yeah.
Significantly.
Person per person.
Yeah, immigration per capita is right below the big cities.
And so these people have to live somewhere.
Sure. And they're usually renting when they get here for sure.
Right?
Yep. Yeah.
So, I mean,
There are some things that we're seeing, within the city limits of Windsor that the city is starting to do to try to help infuse stock, like the additional dwelling unit program, things of that nature, but they're not doing enough.
you mean
Because-
the city itself, like,
Yeah.
like government housing kind of?
No. So the
Making
additional,
it easy for you to add an extra unit on your property.
yeah.
Yeah.
So putting a garden
Government housing
suite
is
in.
always too expensive.
Yeah, no, I'm talking about more like putting in a garden suite, maybe in your yard, or, moving a basement into its own unit. So the city does have a program that gives a pathway to getting that done with some level of ease compared to what it once was, although it's not as easy as we'd like to see, and it takes longer. Everything always takes longer than we'd like to see, and more money than we'd like to see. But I feel like the city really needs to hit hard on multiple facets to address this problem. The problem far surpasses any ADU program that this city is going to put in place. We, to your point, need permitting. Like, people can't even get their permits to renovate spaces. In one example, a personal example that I know, we waited for 6 months for a permit.
I mean,
Like,
that's like, and by the time you get
Right?
the permit, whoever your construction people are, they say, I'm sorry, the quote I gave you
Is no
not
longer, of course,
That's just been especially true for the last 18 months.
that's
Yeah.
totally true.
That's right.
Yeah,
Totally
I know,
true.
We're all going through.
Yeah.
So there's all of these different components that I think the city needs to look at, because what we're seeing happen is as these rents are increasing, which is naturally happening as a result of the shortage, of course, rents are increasing, but that means that there's no affordable bottom either. So from a societal standpoint, and while this may not be such an attractive component from an investment standpoint, but as far as society is concerned, people need to live somewhere. So the bottom, unfortunately, 10 years ago was maybe $500. Now the bottom's $1,100, maybe $1,000 if you're lucky. You know, it depends. You might be able to get a bachelor for $800-900 that's in not great shape. It's tough.
People might think that, you know, especially as landlords, some landlords might think, it's great, I'm getting so much money now. When it's not consistent and it's not a healthy economy,
It's a problem for society, for sure. Because our homeless population increases, our same landlords who might feel some benefit are also feeling repercussions, because then we have individuals,
weren't there before.
expenses that weren't there before, and we also have a homeless population that doesn't have anywhere to go, which means we're seeing increased damage,
More
dumpster
expensive
diving,
damages,
dumping,
exactly.
breaking in front doors, camping out in lobbies, things like that, because people don't have anywhere to go.
Basically, we're screwed.
Well, I think that there's no question.
I think the silver lining is you need to own dirt that's already got a structure on it. That's what you need to do.
Right.
Listen,
Right.
all of it,
I would
all of it is going up.
Myself would never buy a naked property to build on.
It's tough. It's a tough environment to do that in. And as we see rates increase, and we have
Only
developers,
if I was a construction guy, a
Sure.
construction company.
but even in those cases, John, we're seeing that developers are ill-prepared to go forward, or at least at the same capacity. In a lot of cases, they're still going forward, but maybe not at the same capacity as they intended, which puts us in a place where we're supposed to be building 255,000 new builds this year, and we're building 225,000 new builds, and 204,000 next year. Where is that going to put us by 2030 when we are already 3.5 million housing units short by that time?
Ontario's own program, Ford administration came out and said, look, we're going to build 150,000 a year from now till 2032. Okay, that was a year ago. In the budget that they just produced, they lowered it to 85,000 because 150 is just a ridiculous number for them to try to attain. And they're not meeting 85,000. So it's just hard to build new units at the kind of pace that we need them. We are very committed as a country to not slowing down immigration because it is seen as the key to productivity.
It is.
Yeah, I agree with
And
you.
I'll say that as an immigration,
I-
criminal immigration lawyer, you must have immigration.
I agree with you.
You must have. We don't have enough people to
That's right.
maintain all our taxes.
That's right.
We just don't. First generation, maybe they're a pain. Sorry, I'm being quoted. I don't care. They're a pain in the ass. Some of them. I don't care. You can say pain in the ass. Some of them.
Sometimes you
Some
are.
of them are very. I am a pain in the ass more often. But then everybody adjusts, and then they start paying taxes.
It's gotta be balanced though.
Right.
Between the number of homes being built and the amount of people coming in.
That's right.
It's
That's
gotta be a balance.
But
it
it will be a primary component of every election in Canada from now till 2030, or until we get some sort of equilibrium here.
Everybody in this room, I think, understands what you're saying. The problem is the voters out there
Well,
are going to the Dairy Queen and the McDonald's. They
so
are not
good,
aware.
good for them. We need to buy all the real estate that's available.
They're getting their $200 climate action check, $200 climate action check, which my kids are students, but they're getting that. I'm looking at it and I'm going, really? You're giving them $200 every week, every month for sure. I'm paying more than that just on the increase of how much stuff is.
Tough.
Sure.
Well, it's just ridiculous.
It's tough. And as inflation continues, people are asking us a lot, what are you seeing with this interest rate increase? Like, as people continue to struggle to pay their own mortgages in their personal residences or certainly in their investment properties, because sometimes, depending on when people made their purchases, now their payments are outpacing their rent. And let me just tell you, when your payments outpace your rent, no matter how so-called, you're never happy with your property manager. Let me just say that much, right? No matter what cause we had in the story. But at the end of the day, that is happening. It's happening all over the place. And it's happening for a combination of reasons. One is that people absolutely bought at the peak. Two, sometimes people buy when they don't understand what they can actually get in rent. Can't tell you how many calls over the years we've had in lots of markets throughout the last 10, 12 years, where people say, this is what I need in rent based on what I paid. And we're like,
I bought this house and I expect the 1% rule. Like, then you need to move to Timmins.
Unfortunately, it's just not feasible, in the same way that maybe it once was, but it's just not so feasible anymore. And so, despite the fact that obviously the Bank of Canada increased the rates again, and I know that all of our investors are struggling, we're struggling, every single family homeowner is struggling and paying prices that they never wanted to pay, never maybe expected to pay. Our reality is that because of this extreme housing shortage throughout our country that is not getting resolved anytime soon, there's no question that if you can just figure out how to get from here to the other side, you will come out on top in the real estate market in Windsor and Essex County without question. So that is really the key. And that is what we're seeing. It's not easy. You have to be patient, tolerant, all of those things to get through. I mean, we have mortgages and properties that we're being outstripped compared to the rent we're bringing in, for sure, because of when we bought or how we bought or what we took out of the house or what the components of that particular project were. But if you can withstand and push through this, because we all know rates will go down in time, it's not tomorrow, but they will go down. And we know factually over long periods of time, statistically, that property values go up. So even if today they're maybe not up where we'd like them to be, maybe they took a big dip mid last year, but over time, there's no question that the value of property goes up in Windsor and everywhere.
It's going to go up by more than average because we just don't have enough housing. It's period, end of story. It's going to.
I relate.
Yeah, it's okay.
With that. Money's value.
Totally.
That's crazy. That's not gonna work. Yes.
100%.
We'll be different than it is.
They have to. They have to. You're absolutely right. They have to. And when we look at, a 20-year average in Windsor, property rates are well up. So when people say that they're unsure and they're, nervous and they're, they don't know if now's the right time and should I get back into the market or should I steer clear? And we see people pausing and, we just did a client survey, for example. We got really good feedback, really good response rate. And we asked people, are you buying? Are you interested in growing your portfolio right now? And way more people than we expected said, not till the market gets better. And I was like, now's the time.
So they're really saying not till things get more expensive. I'll be interested when they're more expensive.
Right? So it's interesting, but that's, our minds play tricks on us. Fear creates uncertainty among people, and people see these interest rate hikes. They see themselves struggling with, rents being outstripped by interest rates. And they're like, I better not do anything right now. I better just wait. But if you keep waiting, we're going to be in a position, just like many of us said in 2017, 18, 19, 20, when we were like, I should have bought. I thought that price was so crazy. What a good price that actually was. Little did I realize 1 year later, 2 years later, 3 years later, at a price that we saw clients buying at that we thought was crazy. We were like, do you think that's going to work? But we didn't understand at the time. We didn't have
when an owner first paid $70,000 a door, I was like, oh my goodness, what are you thinking? $70,000 a door. Yeah.
What a deal.
I used to get them for 30. Exactly. Yeah. Yeah. Well, that was worth $150 a door today.
Yesterday was a good day to buy. Today's the next best day to buy, for sure.
I think
I'm just concerned about that, though, sorry, I'm putting my hand up.
Please, go ahead. Go ahead. You're good. That's how you roll, John.
It's to be expected when you're in the room, John.
Yeah, I am. I'm very nice, but I'm a little
It's been too long since you were here last, John.
So my concern is not as much what the number is that you buy it as, although that is a huge concern.
Sure.
To a certain extent.
Sure.
It's how much can that guy and gal pay in order to be my tenants? How much can they pay?
What's actually viable?
Yeah, and that's the thing that scares me a little bit.
because I think there's no question that we are transitioning, most of the way through transitioning, to a market where you need to factor in appreciation in your calculations, because you're going to be underwater. Like you're not, this is not I used to say when people were looking in Windsor way back in the day now, that Toronto is like a growth stock where you're counting on the land appreciation. And Windsor's like a value stock that's going to pay you a dividend every month forever.
Sure.
Right? Windsor no longer pays dividends. You cannot rent a house in Windsor for enough. If it's single family, especially, you can't rent a house. You can't rent a house for enough to cover all of your costs.
And
It's
create
just
cash
not possible. You're not going to get any cash flow. But those same single family houses, right? That you bought that on December 31st for $474,000. That's worth $535,000 today. Did you lose 71 grand in being underwater between December 31st and today?
Of course not.
Absolutely not. So that's becoming more of a speculative growth stock kind of environment where you're counting on the underlying value of the dirt to go up, really. That's really what you're counting on.
When is a stock a bad stock?
When you sell it.
When it goes down and
the
you
government
sell.
takes its.
Yeah, when you
You're for long term.
when you lock the loss in.
Sure.
That's when it's a bad.
Long term.
Sure.
You'll
ride it.
So-
yeah.
You know, there's
How much equity you put in the property.
yeah.
See, this is a big problem, is people are still used to putting a small amount down, and I mean, that's not really.
As houses get more and more expensive, there's going to be
Less
smaller and
viable.
smaller amounts down.
That's very difficult.
And we will become, in our larger centers, a city of landlords and renters, a country of landlords and renters, if this continues.
Very sad.
Right? That's what will happen.
And that's a lot of why we're not seeing multifamily move in the same way that it did previously, because we're not seeing the ability to put the same 25% down that you once could because of the interest rate increase. Costs are up, the debt coverage ratio is required, and then as a result, people are having to put, more like 30, 35, 40% down in some cases, which is less tenable for people.
Yeah.
And so they're just not moving.
If you're an apartment building owner and you bought your apartment building before 12 months ago, you're paying an interest rate under 3 probably for a little while until they had the reset,
For now.
right? You're getting the best rents, better rents than you ever imagined on that property. Why in the world would you sell it for less than top dollar? That's why nothing's moving. Because I own apartment buildings, I don't want to sell them to you for any sort of discount. But when you go to your bank, the bank's like, I'm only going to finance 70, 60, 50% of that purchase. And I'm saying it doesn't matter because I'm happy to keep it, right? Now, there's going to be some opportunities as those mortgages come up for renewal, because if it was close to the line at 2.6
It's not healthy.
and now it's 6.4, there'll be some people looking to sell. So that
we can't foresee, because everything that I know, I've read about, I've never seen something. When you have inflation so fast, you should be able to have a buyer's market of people that have big money that just want to buy because everybody's
because
they're afraid.
you've got inflation, but you don't have in housing. There's no price drop because immigration is keeping the price stable, and that is really annoying to the Bank of Canada, because they really want to not raise rates and have the housing market break, and it's not going to break. I don't know what they're going to need to do to make it break.
$8 exchange rate.
Yeah. Well, not for 2 years, because if you're outside of Canada, you can't buy anything here right now. But of course,
2 years ago,
Sure.
yeah,
US dollar versus Canadian
sure.
dollar. Now it's 1.35.
Yeah. And I think,
Is there any correlation or kind of?
well, I think the most direct correlation is that the Bank of Canada has to be careful at how differentiated their rate becomes from the US, or our dollar will tank. Right? So as much as they might like to stop, if the Fed doesn't stop in the States, and the interest, like who would buy Canadian dollars if you can get 50 basis points more on an American dollar that's the reserve currency for the world? Like, I wouldn't even do that. So, and I no one loves Canada more than me. So the Bank of Canada is going to have to raise rates maybe more than they'd like if the Fed continues to raise rates. Now, I'm hopeful that the Fed will pause tomorrow, but I don't think it's over for them, because I think their economy is still running hot. And we're going to hear some really good news on inflation. We heard some really good news today. We're down, the US was down to 4% year over year. We're going to go down into the threes next month. I've been waiting for June all year because we went up by 1.2% last year in this month, right? So for sure we're going down. We're going to go down into the threes. Everybody's going to be, we did it. Except, and that's where I was until about 3 weeks ago, the base, so you're always comparing to a year before, right? So we've had these great comparisons all the way through 2023 because 2022, the rates went up so much every month until June. And then we were so high, we were all freaking out. Inflation's going to be like it was in 1979, and it stopped going up. So now, after June, the baselines are not going to be nearly as charitable for this year's rates. So I think we'll get down under 4. We're going to get into the threes, and then we're going to stick in the threes. And that's going to really bug all of the central bankers because they really want that rate below 3. So we'll see how long it takes to get there.
You better be careful with statistics because an election year is coming up. So and I said
No
Russia,
question.
And I said Russia because not just Russia, the new currency that Russia. And, I don't know how that's going to affect the U.S. I don't think the U.S. is going to pay.
I don't, well,
It will be an effect.
someday it will, but not now.
anytime soon.
Well, it's going to
But
come
there's
sooner than you
an
think.
effect.
And like, if you are,
What do they call the
if you're an
Russian
investor in an
press?
S&P 500 ETF, you're doing great, right? If you're in an ETF, an S&P 500 ETF, you're doing great. And it's not really understood that well by that many people that 7 companies are driving the whole increase.
Sure. For sure.
7 companies. So well, like the S&P 500 is kind of like if you're investing in the stock market, it's kind of like a safe way to invest in the U.S. economy, right? It's the 500 biggest companies in the country, right? There are 7 that are way up this year. Tesla, Apple now is up, Nvidia is up huge, like 100%, right? Those 7 companies are all huge and they're all up a lot, so they're bringing the whole index up with them. So there are, if you take a look at the 493 smallest companies in the S&P 500, they're breaking even for the year. But those top 7 are way up. Now, I won't get into stock market stuff. I'm getting way out of my league. But the reality is that if Americans feel as though their economy is strong because their 401ks look good and their housing prices haven't fallen apart and they keep spending on vacations, and so Carnival Cruises goes up by 12% yesterday because they have record bookings for cruises, then is the Fed going to stop? They're not going to stop either. They can't.
So, with this increase, they're hoping that prices will.
Correct. That's the whole idea. I mean, they don't really want them to go down because that causes other problems, but they want them to stabilize and just stay where they are. That's what they're. So if the price is stabilized, then over time we'll get down to a 2% rate, right? Because if it just stays the same for 12 months, then we'd be at a 0% inflation rate.
But it's hard to keep prices the same when concrete is so expensive.
That's all of that is true. That's all of
That's the
that
problem.
is. That's why central
That's part of
bankers
inflation.
go to a lot of school, and I still make fun of them, but they know an awful lot more than I do about what they're doing.
So anybody have any thoughts, any questions, whether it's about what we're seeing in the marketplace, what we're seeing in rentals, what we're seeing in condos? Anybody have any thoughts, comments, anything they want to add, or anything that's maybe a burning question or something that you guys really want to have covered tonight? Yeah, please.
I have something that's more granular.
Sure.
What are you seeing in terms of investor interest in boards 1 and 2?
Yeah, it's a good question. I mean, I think that it's very interesting to see what's going on right now, and I think that everybody has the same type of question mark around where this is actually going to land once things get sorted out. I mean, I'd love to ask Rick and Isaac, what are you guys seeing in wards 1 and 2? Are you seeing a slowdown or what?
I'm definitely not seeing the number of getting offers.
Cooling.
anywhere else in the city.
Yeah.
So, just actually had an amazing, what I thought was an amazing piece of property on Peter Street that went to multiple offers yesterday. We did get what we thought was reasonable and fair, but it had already 3.1 zoning. It had 208 feet of depth. It had potential for somebody to pick it up and do an attached ADU and a secondary suite for free, but it was perceived only by the first-time buyers. Investors just
Didn't even look at it.
So,
Yeah.
I'm seeing that.
Seeing some reservation.
And my investors that have been selling those boards, the buyers for the properties actually have been people in
Live there.
displace a tenant.
And that's a lot of what happens, right?
Just not really
Because
solving the city's problem here.
There's so much gray area, and until we have our court date in November with the city,
There's
we
no
won't
clarity.
know what the direction is.
I think they hit the pause button until we find out the legal ramifications.
Yeah.
And some type of determination. I think it's on pause right now.
Yeah.
I think it's on pause too. Problem with the pause is if you've done all the work to qualify, and then you decide, I'm not gonna get my license
Because I might not have to.
because I might not have to, which I think is a reasonable decision to make. And then we get to November and they reaffirm their decision. All of your stuff that you did is out of date now. You got to redo it.
So your police clearance, your notarization of your identification, all of these sorts of things that you've done that are only valid for a period of time are now out of date.
I
So-
just did the inspection today, so.
How'd it go? Yeah, sure. We'd love to hear it. How'd it go?
They're very interested in the fire stuff.
Okay.
That's-
Was it the same inspection, one person?
fire
Two
and-
separate? Yeah.
two guys.
Did they come together?
They come together, I think they're doing everything. Yeah, absolutely.
Do you have people living in your basement in the property you're in?
Yeah, it's a legal triplex.
Okay,
Yeah.
yeah.
It's illegal.
That's,
So I think the two things are going to be fire, all of the fire stuff, because they've always been harsh about fire. They just don't get into every
they come to
place.
your property. They
John
have to be
Cement
harsh
thinks they
about
should be harsh about fire. He has a fire a week or two some
it.
weeks.
Too soon, Dale. Too soon. Too soon. It's been 3 years.
But-
Way too
But
soon.
I think the other thing we can expect them to be concerned about is basement ceiling height. Beyond that, we'll see. But
Yeah, it was very quick. Like, if your place is in good shape.
They were all right.
I saw they did 3 units in 20 minutes.
Yeah. Good to hear.
They tested the smoke.
Yeah.
Alarms, yep.
That's true. Every time a fire, they come do fire, they do all of
Yeah,
that.
they have to do that when they come on site and actually get to your property. The difference is they don't usually get to this volume of property,
That's
right?
right.
That's
I
the reality.
proceeded exactly what the reason you gave. I had the ESA.
Yeah, you did all of
Everything's already
that. So
ready.
now what do you
Had
do?
to expire.
Right.
You know, I mean, if it gets overturned, I'm out almost $2,000.
That's right.
Yeah. I'll share that. That's what we chose too, because we have property in those wards as well. And we decided to proceed forward with license. Because here's the thing, at the end of the day, first of all, we've already done all the work. We've done the paperwork, we've done the legwork, we've done all the things. We don't want those to come out of date. And whatever we had to do because it wasn't quite in compliance, we should have been doing anyway. That's what it is. I mean, no, we don't have a screen in every single window in every property we've ever owned. There are gaps, of course, but you know, that's who I have the most empathy for is our owners who take generally quite good care, and doesn't mean they have a screen in every window, but generally speaking, they take pretty good care.
But let's just say our
But
guys are
that's-
getting really good at building screens.
Yeah.
We're doing a lot of screen building.
We're doing a lot of screens right now. But
They're really not going through it with that much detail. Like one of my units had the attic, or furnaces in the attic.
Yep.
They didn't even ask.
where it was.
Okay. Really, it's about
Good.
fire.
Oh, that's good feedback. Appreciate that.
Thank you, sir.
Yeah, appreciate that feedback.
Not as bad as I
Hearing that makes me think it's definitely a gap. Like, honestly, like I've done everything to get mine to the point of licensing.
I'm like, please look at every window. Please look at all my screens. Yeah,
They made $1,500 in 20 minutes.
that's
Yeah,
right.
exactly. All the reasons.
It's tough. It's tough. And it is tough because at the end of the day, it is the council that's brought it forward. It is council that's pushed it, and it is specific members, obviously a majority, who have been in a position that they say, hey, this is a solution. I think that a solution is needed. I don't know that this is the solution. I guess we're going to see.
every person that I've spoken to has the same solution that I said. Never do you get into this stupidity of a licensing. What you do is you warn landlords, because most landlords are doing their job. You that are not, obviously. You warn
Who also
landlords
probably
you
won't
have
apply for the
blitz.
license.
Well, yeah.
Yeah, exactly.
So you warn landlords and then you do a blitz.
Yeah.
Like,
Yeah.
I know from the city people that are working, and they won't say it out loud, but they're having a hell of a time. just keeping up.
Yeah, they'll say it out loud. They just won't say it to the media, but
That's what I'm
they're
saying.
pretty clear.
That's what I'm
The
saying.
admin didn't support it. They are supporting it now because their bosses told them to do it.
Yeah, and then how many things can you do in the same day? And it's not
I think-
once every 5 years, it's every year.
I think
And now it's only Ward 1 and 2.
Yeah.
And if it goes to
For
the
now.
whole city,
Yeah.
come on, man. What's that?
the challenge is that we just spent
The
45
license.
minutes talking about the housing crisis and how there isn't enough housing, and we're doing inspections to reduce housing. Right? Like
And that's a
that's the
problem.
net effect. That's what the city
And
admin
on top of-
who have to house everybody is thinking, is like, why are we doing this? Like, I don't want slumlords either, but the net effect of what we're doing is we're going to reduce housing spaces. And
We
almost
cannot
all the
afford
ones
that.
we're going to get rid of are the cheapest ones in the wards. Like a unit in West Windsor that's $1,400 is not going to have a problem with the inspection.
Right.
But units that are $550, they're going to have inspection problems.
Again, hitting the lowest people that really need the
It's
help
tough.
the most.
They need the
And many
space.
landlords are passing that on to their tenants. So
Well, where they
that
can, I
extra
mean,
$50 a month for them is $60. Some people, it's
but the problem is really they can't do that, right? You've got a 2.5% increase allowance, and based on where rents are at, that doesn't usually equal
Yeah.
$50 in
And-
those types of housing.
And the reality is what's driving your price increase is the lack of housing, not the license fee, right? So yeah, you might be able to charge it, but it's not because you're passing on the fee. It's because there's so little housing that
Demand is
the
high.
demand for what's there is high.
Isaac,
In Kitchener, they actually supported.
they gave an allowance
So it will be passed.
eventually, but it's still a process.
That's the problem. In my opinion, and I know people that are landlords may not agree with me, but in my opinion, that's just wrong. Because we're already, and I'm sorry if I'm not trying to be high and mighty here, but you know what? A lot of these people, $50,000, $60,000 a month.
Well, it's a catch-22 problem because here's the thing, it's a problem for the landlord, it's a problem for the tenant. So what are we doing?
Somebody's getting screwed, it's either one or the
Or
other.
both, right?
And
Like,
this is the problem is, and what actual benefit are we getting? Because most of these properties are clean.
And you're getting rid of some of your worst housing places, which the city already knew existed.
Which you can do that with a blitz.
That's right.
that's right.
It's
That's right.
It's very simple.
It's about that area, when they're gonna apply this.
2 years.
So it's a 2-year pilot.
Well, let's see if.
After 2 years.
Yeah, I think there's a chance that it applies to the whole city in November, or it goes away.
It's
Yeah.
hard to say right now because they have a hearing in November to see what the outcome will be, but technically it's set to be a 2-year pilot.
This all didn't have to be done. This is political redundance.
Oh, yeah, this is for votes and for money.
This is for votes, money.
I think there's no question.
No
though.
argument for me on that
But you know
one.
what, though? I have to interject and say, there's no question that there are property owners in this city that do not keep their property to what I call the Marda standard. They don't. They do not. But the problem is those individuals also will not apply for the license. So you have to blitz to get the underlying
Yes.
population that is not keeping their property to an acceptable standard anyway. So the people caught in the middle just doesn't make a lot of sense to me.
Everybody's heard of catching tuna, and unfortunately you catch some dolphins. But in this one, you're gonna catch a lot more dolphins than tunas. So it's just dumb.
The reason I say that is because the rules and regulations were already in place.
Right.
They just weren't
Being followed,
enforcing them.
yeah.
Because they didn't have the people.
You didn't need the licensing, you didn't need this political crap, you didn't need this tax
Yep.
crap. The rules and regulations were already in
Yep.
place, all they had to do was enforce
That's right.
You see,
them. Without all of the other,
So they raised the money to get the enforcement team.
they raise the money, and it's gonna hurt the economy.
All right.
I'm gonna say if you're a student rental investor, the landlord, it's great. Because it's gonna wipe out competition. There's a lot of turnover with students.
You're right. There's a lot of turnover with students. Student housing is some of also the worst stock that we have in the city.
We'll see. We'll see how. I'm interested to see the third area of inspections that I think they're going to pick up, that they're going to have to deal with, that they'd rather not, is overcrowded student housing, which is keeping housing cheap for those students, but really not. It's not very safe, right? Like if you know, Con's got a beautiful property in the West End, but if we put 30 people in it, it wouldn't be as good.
So great.
This all started because of that one fire.
Yeah,
That's right. Peter and Mill.
Only one exit.
that's it.
So, okay, it started from the one fire, there was one exit.
Yep.
So what do? Let's get a shotgun and shoot the fires.
No. Well, it's-
Look, and you go, a
Just-
smart way
just-
would have been a blitz.
just watch some Kijiji ads. You'll be all right.
Let's hope it-
Anybody have anything else that they want to go over tonight or that they want to hear about, chat about, feedback? Go ahead. Yeah.
See a difference between multi-unit or different price brackets?
Yep. So couple interesting things on that point. So we are finding right now that our single family house market is very dry. We have very little in single family houses.
Either
So-
available or
Turning over.
turning over.
Yeah. Compared to 1-bedroom and 2-bedroom apartments. Okay. Now I will say that while it has started to improve, we had quite a saturation in 2-bedroom apartments in April and May. It was very interesting to see because what people thought they could achieve in rent was no longer so viable because the market was starting to be saturated. So people were, we had so many 2-bedrooms on the market, like within Marda and throughout the city, that you just were competing against so many different options. People had options, a lot of options, that we had to start to get more competitive in price.
Because I think what happened there is we had the rental equivalent of downgrading from Costco to Dollarama, right? People started just fitting into 1-bedrooms. And so the 1-bedrooms
left a lot more 2-bedrooms available.
1-bedrooms were very hot, nothing available, but 2-bedrooms sat vacant. You could kind of get almost your price for the 2-bedroom if you called it a 1-bedroom for a while.
We were actually advertising properties as 1-bedroom that were 2 bedrooms.
It was a study.
Because you could actually get a renter quicker than in the 2-bedroom market in the course of April and May because there was such a saturation. So we were actually just using different advertising strategies to try to attract people who really wanted 1-bedrooms, but were actually willing to pay the price. But in their search criteria, they were looking for 1-bedroom. So we find that really interesting. The other thing that's happened, you know, with the way the market has started to trend is that people who are paying $2,000 and more in rent, which is more commonplace than it's ever been as rental rates continue to creep up, are having a harder and harder time.
It used to be, but we're following this metric really close. It's really important to, I think, for the health of the rental market. $2,000 a month, those rents used to be paid on time, on the first, automatically, all the time, because those were professionals. Those were expensive rents until 2 years ago. And all of a sudden, about 8 months ago, we started to see a significant amount of late payment amongst folks paying $2,000
or more.
And they got through my screening process, which I think is really good, but they were still struggling because they really stretched what they could do to get into an apartment that they thought was reasonable, and now that cost $2,000. They really wanted, but I bet when they started looking, if they haven't been paying attention, they thought they were going to pay $1,200, and they ended up paying $2,100, and that's just hard to do.
But that's what the market's
calling
for
the
product.
For the first time in our history, people over 2,000 regularly showing up on our list of people we need to go make calls to collect rent from.
Which was never true.
And that was never true.
Never true before.
You can only put so many monkeys on a tree before it breaks.
Go ahead.
Pardon me?
Is that like a newer apartment?
Usually.
I mean,
Condos for like $2,000.
yeah, condos, single family houses for sure.
Like 3-bedroom
Tons
houses
of
are
single family
2,000.
houses are $2,000.
I just think that $2,000 is, as a percentage of the median income in Windsor, is a lot of money. That's all. That's the bottom line.
You guys think the market revenue?
Right now, I would say a 1-bedroom, you're probably, I mean, obviously there's a lot of factors at play. If you're reasonably renovated in a reasonable location, at a plus hydro rate, 1-bedroom, you're probably between $1,250 and $1,299 plus hydro. At a 2-bedroom, you're usually about $100 to $150 more than that. And again, obviously it's an ambiguous question. Could be lot of
But
different
the interesting thing
factors,
is the
but-
ceiling kind of used to be, once upon a time, the ceiling was 2,000. Like it didn't matter. I used to tell people, your house can be $5 million. You can't get more than 2,000 in rent in this city. That's not true anymore at all. We're up 24, 25, 26. It's more like
We've got a place
3,000.
for, we've got a place for,
now.
we have a
that's
place
kinda
for
like-
3,600 right now. That's our highest rent. It is.
$40,000.
It is. It's very nice, but, and it's an oddity, like it's an outlier, but there was never any such property.
Yeah.
Like, actually, we had that same property and it was 2,200 at a time,
And it was an outlier then.
but things are creeping up and up and up. It's in Bell River.
However,
Oh,
It's
It's a
in Bell
large,
River.
it's a large home in Bell
yeah,
River.
it's a nice, in one of the McMansion.
Yeah, it's a,
sub-
it's a
subdivisions.
beautiful home by all means, but. Well,
No, it's not. I don't
depends
think
when
it's
you bought
covering.
it.
I don't think it's covering. And
Yeah.
that owner has a strategy that I have questioned all along until I look at the fact that he's owned these houses now for 12 or 15 years, or maybe not that long, but
10
8 to 10
plus.
years. And I'm like, holy cow, he's got a triple on every one of those houses. Like,
Everything he's ever bought.
holy
We
cow.
manage about 15 houses
He's
for
made
him.
millions of dollars on these
Yeah,
houses.
Every house he's bought, he's never had a rent under 2,000 ever.
So I don't think he's made very much
Just
on
a
the
different
rentals at all.
strategy, right?
He's just made it on the appreciation.
The appreciation.
Appreciation.
Anybody have anything else? Any other questions, guys?
All right.
Well, thank you guys very much. We appreciate you coming. Take lots of opportunity to chat with anybody else who's here tonight. Chat with us, grab a bite to eat, and thank you so much. We just thought it was a good opportunity to get together and talk a little bit about what we're seeing here in the market, rental, sale, Windsor-Essex County, that sort of thing. So stick around if you
And
can.
it's our intention to do this every month, and we'll have stats. That'll be what I bring to the table. I'll bring some data every month. And the stat that I really like about where we are last year, like when we're looking at prices, and then we were back to June 24th, that comes from Isaac. He's a real estate agent here in the city, and
Thank
he
you,
gives
Isaac.
us that number every week, and I'm bugging
Lots of
Marla
good data.
for it the moment that it's available.
And then I am bugging Isaac for it. So thank you, Isaac. Thanks, guys.
All right.
Appreciate you guys coming out tonight.
Thank you, Gail. Thank you, Mark.
Absolutely.